Hi there and welcome to our segment Cut Through the Noise. So today we are going to answer common questions that we have been hearing throughout the month, along with what's going on around the world. As always, if you have a question that you'd like us to answer, drop a comment below, or you can send us an email at admin@onedegreeadvisors.com. So Anthony, let's get right into it. I know a common question we've been hearing throughout the month is, should I buy Tesla or maybe or Apple due to the stock splits?
Yeah, so last week they split, they got an immediate jump in their stock price.
Yep.
It seemed very speculative in nature. I think it's important to understand, and I like the analogy to help explain what a stock split is. It's kind of like taking a $100 bill and exchanging it for 520s. And so there's no real value creation by a stock split in itself, yet it does tend to generate some interest.
Well, of course, the big thing that the big buzz people talk about it is by creating stock splits, it thereby decreases the individual price of a single stock of either Apple or Tesla. Therefore, it makes it more readily accessible to the masses, right? So it's cheaper, more people can get into it. Therefore, it'll drive up demand. Therefore, it will drive up prices. I mean, who knows if that's actually a legitimate cause? And again, I think one of the things that we should be paying attention to and looking forward in the future is fractional shares is becoming a bigger thing. And really what that is the ability to buy a partial share of an ETF or a stock. You know, like I can buy 0.25 shares of Apple. If that continues to happen and we move toward the future of fractional shares is just a way of life and, you know, it's no different than anything else, maybe this whole phenomenon goes away and maybe we see that, you know, it really just is artificial, it's short term, and it's really no more than glorified gambling in the short term, right? Because I'm just betting based upon a stock split that prices are going to go up.
Right, and we should point out that after that initial bump, the shares did drop. And so, I mean, you really see it as, and that's not saying it's always the case, but you really saw sort of the speculative nature of it.
Yep.
Where there was so much buzz around it. It was like, hey, I'm going to buy it because I think you're going to buy it. Yeah. And therefore I'm going to profit from it.
There's always someone on the end of the trade, right? When you're buying, someone else is selling. It's not just this artificial imaginary thing.
Right. All right, let's go to question number 2. What should small business owners do to stay afloat through this pandemic and the pending shutdowns?
Yeah, it's a really good question. I think a lot of business owners are doing the right things. You know, they're reaching out, they're using their network and their resources, and they're trying to apply for PPP and EIDL loans. I'd say the one thing I have been noticing, though, with several business owners, and I'll just give you an example. This is a very recent case. Not actually a client of ours. She was referred to me by someone through my church, small business that was kind of struggling. And I, just kind of pointed her to the direction of the SBA resources that are available. You know, talk with a representative, tell them about your unique situation, and they can help walk you through, the different avenues that you might explore. And sure enough, they were able to get funding through the EIDL that they previously thought they weren't able to. Again, this isn't a big pat on the back to myself. But the point I'm trying to make is biggest thing business owners can do right now staying afloat is just being flexible, being adaptive, and reaching out to their network, trying to see what options are available, even if it does seem kind of far-fetched, really reaching out.
Yeah, no, I mean, you're the small business expert, but are you really sensing like that frustration in business owners, mainly because of the changing guidance?
Absolutely. Things are going back and forth seems like on a weekly, if not monthly basis. So I can certainly feel for them. Again, the biggest thing is just being flexible. I love seeing businesses and business owners getting creative, whether that be doing things outdoors, finding unique ways to do delivery, change up their product or service offering. That's been a huge win for businesses that are able to stay flexible and willing to change.
Yeah, cool.
All right. So another big question, of course, this is a, kind of a difficult question to answer, but it's, are we headed towards hyperinflation?
Yeah. Hyperinflation is an extreme scenario. I think by its definition, it's something like, 50% loss of value every month.
So we're not talking about, a percentage or 2 per year. I mean, this is something quite dramatic.
Right. And it's kind of one of those things where anybody that's ever said, yes, we're headed for hyperinflation has always been wrong, at least in the history of this country. So it's not saying it couldn't happen, but it's a very extreme scenario that's never happened here in our country.
Yeah.
Chrissy Hamilton had a great thread on Twitter where she answered this question basically, and her summary was that it basically wouldn't happen because of the reserve currency of the United States. So 60% of all foreign currency reserves are held in United States dollar, and basically commodities are run through the U.S. dollar. So there's so much that's intertwined with it, and given it is a very complex topic, it's an extremely difficult situation for that to happen.
So kind of like in summary, I mean, it's not out of the question, but the likelihood of it happening to any country, let alone the U.S., it kind of like keeps decreasing the chances of it happening.
Yeah, and probably the better response is to say, okay, if we're worried about inflation, what do we do about it? And things like diversification of assets, like having real estate, even stocks are a good diversifier hedge against long-term inflation. If you're really concerned with it, precious metals like gold can be a good hedge. And not advocating anything in particular, but just the principle of diversification.
Real assets, that kind of principle.
Exactly.
Definitely.
All right, number 4, should I invest more defensively until after the election? It's a big one. What do you think?
Yeah, this might be one of the biggest question of them all. I feel like we're getting it almost every time we talk with clients or prospects. So really good question. One that's difficult to answer in a vacuum, right? Because I think the biggest thing with a question like this is, how does it relate to, say, someone's financial plan? I'd say the bigger thing with it too is you don't need to be making large changes, right? I mean, each person's plan and situation is unique, but being someone who goes, I'm a very aggressive, growth-oriented investor, but I'm getting skittish or nervous, and I'm going to go to all cash, right? That's a very different situation than saying, I'm an investor, a growth investor. I'm getting nervous. I feel like I need to make an adjustment. We have that conversation. We figure out, let's make a plan. Let's make a plan around this. Okay, maybe we pull back like 10%, and then let's make a game plan. How do we move forward from here? So in a couple months, let's check in. Let's see how you're feeling. Do we need to continue to trim off, or are we feeling a little bit better? That's a much better plan of attack than just going, I'm going all defensive, that's it, I'm throwing in the towel, and then we'll invest later.
Right, trying to avoid those extreme situations. Capital Group does a good job of researching elections, and I was looking at some of their statistics too, and basically they said that that with the S&P 500, out of 18 of the last 19 presidential elections, a hypothetical $10,000 investment was basically positive 10 years later. And the only time it wasn't was actually with the second George Bush. So you really had like the tech bubble bursting on the front end and the financial crisis on the back. And so it just sort of ended up at a little bit negative at that point in time. Now that's just stats and everything, but that's why you have to really consider your financial plan. What are you investing for? Is it for the long term, or are we talking short-term money instead?
Yeah. And honestly, that's what I love. That's the human aspect of it. It's, we talk about stats and we can say stats do this, but when it gets down to it and working with an advisor, talking with them, I mean, if you're not talking with an advisor, we can certainly help you with this, but it's sitting down and going, how do we make a game plan from here? Not just, well, here's what the stat says, but how do we work for your situation? So yeah, I really like that bit. So anyways, we hope you enjoyed this. We hope it was helpful. This is our segment, Cut Through the Noise. If you have any questions you'd like us to answer, please drop us a comment below, or you can send us an email at admin@onedegreeadvisors.com. We look forward to talking with you.